with chaos at the New York Stock Exchange.
Get back in there at once and sell!
We are looking at major records for the Dow.
Now is the time to buy.
Well, the law of gravity hit Wall Street today.
We're down by between 3 and 4.5%. The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
You gonna do something or just stand there and bleed?
The whole town's gone crazy.
Hello and welcome to this week's edition of the Big Money Report. I'm your host, David Booth, President and Financial Advisor at BIG Investment Services. That's BIG, Booth Investment Group. We're a full-service financial advisory based out of Dover, Delaware, serving clients all across America. And you can read all about us at abigplan.com. That's www.abigplan.com. I like to put the show together once a week just to give you a recap of the week behind and a peek at the week and weeks to come. Trying to keep you up to speed with you and your money. And we're glad you're with us today. It is Friday, June 20th, 2025, the first day of summer, the longest day of the year. Some shout outs to Tony, Sue, Karen, Chuck, and Brian. Hey, and a big BIG shout out to our very own Rachel. There at the office, making some big career moves with BIG this week, so congrats to her. Hey, let's go ahead and jump into the numbers, tell you what is going on. Kind of a flat to mixed bag this week. Market's really not doing a whole heck of a lot. They moved quite a bit during the week, but they really didn't finish up or down one way or the other. Dow Jones, flat on the week. S&P 500 down 0.15. The NASDAQ composite up 0.2, and the Russell Small Cap's up 0.4. So a little movement there on the Russell Small Cap Index, which is lagging. It's down 5.5% on the year, so it needs to move a little bit, doesn't it? Taking a look at the volatility index, again, kind of flat on the week, down 0.9% on the volatility index, coming in at 20.5, let's say. So we'll be watching that, see if that spikes up with all the things that are going on in the world today. And then long-term bonds, they pushed up a little bit this week, up 0.2%. And I will say that there's a couple of fearful days in the market this week with everything going on with Iran and Israel. And I was happy to see bonds getting a little bit of love. Because remember last week we were talking about that. I've been kind of concerned about the lack of interest in U.S. Treasuries with all that's going on in the world right now. Saw a little bit better action this week. That made me feel comfortable. Taking a look at the indices, all the different sectors within the market. Again, kind of a mixed bag. Retail sales are up a little bit, up 2.2. Semiconductors up 1.2. But the other things were down. Utilities were down 0.7, discretionary down 0.5%, healthcare was down 2.5%, materials down 1%, tech was up 0.5%. So kind of a mixed thing. No screaming messages coming from the market this week. Energy up 1%. So not too much there on energy. It was up a lot last week, not so much this week. And gold down 1.9%. Again, a little surprising given all that's happening in the world. Down 2% on gold this week, and then down 0.75% with silver. So what is moving markets this week? Well, mainly the Iran and Israel situation. That's really the main thing driving markets. We did have some news this week, and I'll talk about it here in a minute. And look, we talked about this last week. The market tends to have a knee-jerk reaction to large geopolitical events, wars, things like that, attacks, etc. And it tends to look past it or through it pretty quickly. This is a pretty big deal, what's going on over there, and it's going to be interesting to see how things shake out. The market, I think, has kind of responded to the fact that we did not get involved yet. Right now, the latest is that we are going to make a decision within the next 2 weeks. European officials and Iran are meeting in Switzerland, trying to hash some things out. We'll see how it all goes. Look, I'm a more libertarian-minded kind of guy. I really don't think that any country has any business telling any other country what they can and can't do when it comes to their own defense. You know, the problem that you've got, though, is when you got the leader of a nation, and look, Iran's no small country. We're 300-some million people here. There are 92 million there, 92 million people in Iran. We're not talking about a tiny little speck of a nation here. It's a sizable country. And when you have the leader of a large country saying they're going to wipe a country off the map, going to eliminate it, erase it, that's something to be taken seriously. And, you know, if I were their neighbor and being threatened like that, I wouldn't want them to have the means to do what they say they want to do. But it really is uncomfortable, right? Getting involved in the middle of that sort of thing. And I do think there's a window open here that will probably not be open again because things have unfolded the way that they have. And it looks like the United States is the only avenue to try to take out this nuclear facility that's under the mountain, Fordham, there in Iran. If doing so could cause some repercussions, and we'll see how it shakes out. We're going to see what comes together. Markets will react to whatever that may be, right? If things settle down and come to a close, market will probably respond. And if things escalate, the market will probably respond. But any sort of movement there to the negative, I think will probably be short-lived, and the market will probably settle back down again. So we'll be watching all of that. In other news this week, you had Fed Chair Powell and company. They had their meeting. No change, no interest rate cuts, no surprise here. Like we talked about this since the beginning of the year, our 2025 outlook, we said, hey, forget about any interest rate cuts until maybe the end of the year. And that's if the employment picture really starts to deteriorate. A lot of folks were kind of surprised by that. They thought we would get some cuts earlier in the year. We just didn't think that was the case. The economy's too strong. And Jay Powell and company are just too hawkish on inflation. And they still are. They're still worried about the inflationary aspects of tariffs, which, again, I think it's a one and done thing. I think it's yet to come. I don't think we've been hit with it yet. I think it'll reflect maybe third or fourth quarter, but it'll be a move and it'll probably settle back down again. So we'll be watching all of that closely. One of the things that concern me a little bit is the Fed did talk about stagflation without using the word. Okay, stagflation, that means no growth with inflation. That's a bad place to be. We had it in the 70s. And when you listen to the Fed speak this week, they lowered the growth projections and they raised their inflation projections. That, ladies and gentlemen, is the definition of stagflation. So that's not a pretty place to be either, but I don't think the probabilities of that are very, very high as far as a long protracted stint of stagflation. I think the tariff impacts will come and go and we'll move on from there. And actually, if we get anything, we're probably more likely to get a recession, but not this year. You know, a couple of months ago when this tariff stuff heated up, I pulled forward my concern and probabilities for recession to 2025. We've since back off to where we were coming into this year, which is, hey, watch out for 2026. That's kind of been our area of concern, 2026 or so. Look, you're starting to see things in the numbers that tend to start happening well prior to recession coming into play. And understand something, recessions do not announce themselves, right? They don't come with fanfare and big pre-announcement where everyone's expecting it. They usually sneak up on the economy. That's why when everyone's worried about a recession and everyone's talking about it, I tend to not be as concerned. And I tend to get more concerned when no one's talking about it, when nobody's expecting it, because that's usually how these things happen. And with all of that said, one of the things that we're really focused on right now at BIG is our portfolio allocation. So look, I think the easy money from that 2022 bear market, when we had that inflation scare, the easy money from the lows in 2022 till today has been made. And moving forward from here, recession risk is going to loom in front of us day in and day out, month in and month out, quarter in and quarter out, until we actually get one. It may not be 26. It could be 27 or 28 or 2030. I don't know when. No one does. But the recession risk will loom in front of us until it comes, and it will come. So what we want to do right now is be really, really disciplined with our diversification. And that's what we're doing, right? We spread out internationally. At the beginning of the year, we got extra money in Europe, some money in Southeast Asia. We've got some money in India. We also have good positions in bonds, and we've added some commodity exposure with managed futures. So we are really positioned for if the economy were to slip into recession, if it were to sneak up on us, the market were to go haywire, we are really well positioned to weather that and handle that. I don't think it's happening now, not in 25. I think things look too constructive for the market moving forward. The economy is hanging in there. Although there's some weaknesses, right? Retail sales were terrible this week. Housing starts, terrible. There's some big off numbers there. Manufacturing numbers haven't looked good. The weekless jobless claims continue to elevate and push higher. That's something that we watch very closely. So I do think that there's certainly a growth slowdown, and it could lead to a recession down the road. I don't think it happens this year. I think it's more likely in 2026 or so. And we just want to go ahead and maintain a really disciplined approach moving forward. Speaking of that, moving money around, I came across two different competitors this week by happenstance, two completely different competitors that were really dismissing managing the money, all focused on the planning, and completely dismissing the benefits of having the money being managed the way we do here at BIG. And I kind of thought that was interesting. I mean, first of all, Look, if you're a client of ours, you know how we operate. We're all about the planning. I mean, planning is first and foremost. Our website is abigplan.com. That's what we do. Estate planning and financial planning, retirement planning, college planning. We are focused on the plan because that's the most important thing. The investments are the vehicle to get you there. But here's the problem that I have with this hands-off approach that seems to be becoming so prominent right now in our industry. I've been to too many bad bear markets. These youngins haven't been through this stuff. I mean, 2000 to 2003, S&P was down over 40%. 08, 09, down over 60%. We had the COVID crash, top to bottom, down 35%. The 2022 inflation scare, that was ugly. And look, at the end of the day, yeah, if you stuck your money in index funds and rode that out, you would probably be all right. But the problem is this: most folks can't stand the pain when things are at their worst. And that's where we come into play, right? Part of the reason why we do what we do is to help keep you in the game when things turn ugly. Because the very worst thing that investors can do is to pull out at the bottom, to let fear take hold and win over. And that's why we really try to help minimize on the downside, try to take advantage when there's opportunities to make more money on the upside. And that's why we do things the way that we do them. And I think it sets us apart because most other folks aren't doing that. Anyway, not to go off into a tangent about it, but we don't talk about the planning here because this is not what this is about. You talk about the planning when you're in for your reviews. This is to tell you what's going on with your money. So you know what we're doing between your reviews to help get you to the end game, to the end goal, which is what it's all about. So with that said, I'm going to go ahead and wrap up. But between now and next few minutes, you're thinking about your future, your long-term goals, all the things you want to do with you and your money. Maybe it is structure your estate plan like we did this past week for a client that wants to leave a sizable amount of money to their grandchildren and not have anything impact or affect that. So we took care of that this week. Maybe it is buy that second house, retire a little early, take that big trip. Hey, you know what your goals are. Don't just think about them. Think big. Think BIG. And I will talk to you next week.
Thank you for listening to this week's edition of the Big Money Report with your host, David Booth, President and Financial Advisor at BIG Investment Services. For more information on BIG and how you can access their planning and investment management services, visit them at abigplan.com. That's abigplan.com. Or call them toll-free at 866-946-PLAN. That's 866-946-7526. The foregoing content reflects the opinions of David Booth and Booth Investment Group Incorporated and is subject to change at any time without notice. There's no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Content provided herein is for informational purposes only and should not be used or construed as investment advice or a recommendation regarding the purchase or sale of any security. All investing involves risk, including the potential for loss of principal. There is no guarantee that any investment plan or strategy will be successful. Please consult a professional before investing.